VADC Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. VADC's management has extensive potash exploration and development experience in Thailand. VADC will have marketing advantage compared to Western producers. Drill program commences this spring. VADC trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vadicventures.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Welcome back to the show, Danielle.
Thank you, Jim.
The Bank of Canada again warning about high Canadian debt. But didn't they kind of encourage it themselves when they lowered rates 3 years ago?
Well, yes, I would say that they encouraged it for the past decade with the policy of every time there was a slump in consumption, driving rates lower and expanding liquidity through financial markets. So, this has been the go-to strategy. As I was explaining to some teenagers the other day who were interested in learning more about money and markets, I was trying to put it in very layman terms, and I realized that in a nutshell, every expansion cycle has to, increases the amount of credit being used, and that drives consumption and spending in the economy. And then after a few years of that, every period has to have a payback period, right? A pay down period. And that necessarily means less spending, less consumption, and typically a rollover in the economy and usually a recession. What they did in the past, 20 years is each time that natural recurring payback period came to the surface, central banks stepped in with new and exotic ways to force more credit through the system, to get more people to take on more debt rather than focus on paying it back. And so we've seen, the crisis of 2008 was this, the line of credit hit an end point because the securitization markets blew up and suddenly they couldn't expand credit further at that point. So governments and central banks stepped in to be the lender of last resort and to provide that liquidity. They restarted the system then without allowing any pay down period. And so here we are, 10 years since the last recession with that much more debt on every level throughout the world. And so, absolutely, when central banks talk about, I heard another commentator say this week that it's unfortunate that, the 20% or the 25% of the population that has blown its brains out on debt are now, going to cost the rest of us, in terms of, financial hardship because there's going to be this, defaults rising, businesses faltering, the pay down period hitting. But truthfully, that's kind of a childish response because those same people taking on credit are at the margin what drove the economic cycle to recover, quote unquote, as long as it did the past few years. Otherwise, we would have topped out very likely in about 2012, which was about the amount of expansion that could be accomplished at that point, given, that we still had record high debts in the world, that we'd just come off a major recession. So we had to have, we should have had a rollover in about 2012, and through these extraneous and extraordinary measures that central banks went to of bond buying and quantitative easing, they were able to reduce the system in terms of more appetite for credit. So now, here we are, those people that took the bait and did self-destructive things, aided and abetted by loose lending rules, by banks that were driven by sales targets, that were, lashing their employees like a dog team to make them hit targets, and still are, by the way, constantly driving them to add new credit facilities, to get people to do all sorts of self-destructive things that are boosting in the short term the bank profits, but in the long run putting us all in harm's way and weighing down the Canadian economy. So it is interesting when the central bank yesterday, when Mr. Pelosi was speaking up in the Northwest Territories, I believe, or in, somewhere up in the high north of Canada, he was doing that speech and he was saying, basically that he would like to see a continued expansion. He would like to say that things are going to, things are going to continue to the positive momentum. But he's concerned that the weight of the debt is a threat to the rosy picture, and that he doesn't know, although in theory they want to raise rates more, in practice it's going to be incredibly difficult. And I think the same thing for the U.S. Central Bank. Yesterday they didn't hike rates either, citing, they took away some of the language that had been talking about positive economic momentum, because the economy has definitely turned down. You've seen in the past couple of quarters a marked slowdown, and that's worldwide. And it's not just the tariff talk out of the Trump administration. It's mostly just that we've had this extraordinarily extended and pretended expansion cycle courtesy of excess debt, and eventually you just run out of ability to keep adding it. And just a small backup in rates, a relatively small backup in rates in terms of how much increase we've seen to date has already had a profound impact on, as I say, at the margin, the people who have been using credit like a drug to sustain their habits and their lifestyle, and companies who have been borrowing their brains out the past few years on cheap debt to buy their own shares and do all these financial gimmicks, mergers, everything that ultimately is a waste of money once the cycle retreats. But they've been doing it all because they could. And we have to look at the central banks as the primary aiders and abettors of that. But then, Jim, as we've said before, no one should be surprised that central banks are there to goose bank profits. That's their primary objective. And why is that? Because the banks themselves are the shareholders of the central bank. So this idea that they're independent or somehow there to serve the public is farcical. They're there to serve the profits of the banks. And so everything that they do is with that primary motivation in mind.
Yeah, it's like the old saying, what's good for General Motors is good for America. And, with central bankers, what's good for the banks is good for the banks, but they're trying to make it seem like it's good for the country.
Yeah, they put praiseworthy lines in there, like they're there to support, stability in prices and full employment. But at the end of the day, that's not true, because all they really want to do is keep an economic cycle going indefinitely with perpetually escalating debt, profits for banks, and never have the payback period. And that therein lies the seeds of our demise, because it's impossible to extend credit indefinitely. Every human being that's ever used debt to advance, even if it's a business goal or something, an investment idea, everybody knows that the goal is ultimately you need to pay back the debt, because that's how you get to net cash flow and savings. That's how you build up capital. And if you never get to the end of paying back that debt, you're, as I said many times, debt is future consumption denied. The longer you carry the debt, the less you're going to have for consumption or just supporting yourself as you age in your life, and the longer you're going to have to work, and the more you're going to have financial stress and trauma. So it's a very self-defeating concept that one can continually add to debt and never actually get out of it.
We'll have more with Danielle Park right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan district of northwestern BC. Check us out at blindcreekresources.com.
Yeah. Oh, right there. I was going to ask about Elon.
Mm-hmm.
Welcome back. We're chatting with Danielle Park. Elon Musk, the boss of Tesla, got a little testy himself when he was asked some tough questions about their stock and how they can't seem to get their cars out on time, and when they do, they get recalled. What's your thoughts on Tesla, and is that a good investment, or is that something you're going to have to be really patient with?
Well, it's not really something you should be patient with. It's something that, is extremely overvalued in terms of the shares of the company, along with most other things, and particularly tech-centric names in this market are as egregiously valued as they were at the top of the tech bubble on many metrics. So we're way past any kind of investable theme in these equity markets at these levels. I would never suggest, and haven't suggested to anybody, that Tesla as a share is a great investment. It's been, heinously overvalued as part of this whole inflation trade with everything else the past few years. However, that said, their product, the leadership that Mr. Musk shows, the foresight, the commitment, the, living it day in, day out, sleeping on the factory floor. This is a billionaire already, right? This is not someone who needs to do this for financial gain himself. He's doing this out of a passionate belief that the future can be brighter if we use smarter technology. Part of it is, the major part of his area of focus is on bringing on what everyone said was impossible, manufacturing an incredibly efficient, excellent, safer, electric car with a battery that could be recharged quickly, with, the other aspect being the solar city, passively capturing green energy and then storing it in batteries. All this was, considered ludicrous mode by the masses 10 years ago. And he has accomplished all of those things, which everyone said, or the mainstream said, was not possible. So there is no question that he has accomplished incredible things in a short period of time. To wit, the major car makers who were all poo-pooing him and saying how ludicrous this all was are now totally committed and rolling out their own lines of electric vehicles, chasing after Musk and trying to catch up. So I think that his frustration comes from the fact that he is going full out, no doubt exhausted. Perhaps he should have the CFO do his Wall Street calls going forward, because if Wall Street is really just interested in numbers, and Mr. Musk is trying to focus on the technology, he's facing a lot of financial risk. There's no question, because he has extended himself in terms of trying to do all these aspects of the vision at one time. So I admire him as a character, as a leader, as a business person, as a risk taker, as an innovator. But in terms of that versus whether I would recommend that anyone buy Tesla shares, and frankly, he's not recommended that anyone buy Tesla shares. He's been saying for years our stocks are extremely overvalued. I don't really know what they're trading on, but if you want to buy one of our cars, we've got the best rated vehicle. Consumer Reports for the past several years have given them the highest ratings in all sorts of different categories. So, he's saying, believe in our product. This is what we're doing. This is what we're committed to. But in terms of the share as a investment, don't buy it unless you're interested in a lot of volatility and unless you have a long-term view about, risk being in a speculative valuation range and all that. So, to his credit, he's constantly trying to tell people, just because I'm really passionate about my cars doesn't mean I'm recommending you should buy my shares. And he's fully aware of the financial risk the company faces. He's living it day in and day out. So I think, what I find so remarkable is that you have an America who has been, underwhelming in terms of its production and innovation outside of Silicon Valley, and social media has been its main sort of product the past few years, which certainly has some benefit in the big picture. But in terms of remarkable innovation, they've been fairly underwhelming, and they're not as good as many other periods in their history. And you've got this America First rhetoric coming out of the leadership of the country, focusing on how do we bring back American jobs, how do we get businesses to innovate, how do we make America, quote, great again. And here you have one of the most visionary companies in the world, led by, someone who's in America, doing all of that. and you have nothing but hatred and criticism coming out of most people about this person. And I just go back to, the reason I think he incites such anger and hate from so many people around him. First of all, because his model challenges the status quo, whether it be internal combustion engines and the oil industry. So people from, Texas and Alberta and all these places that are closely intertwined with the oil business typically have an aversion to Mr. Musk and his message, apparently, because they constantly do, tell us why it's impossible what he's doing and why we'll never get off oil. And, they keep reiterating that as if by saying it, it'll make it so. But at the same time, if you are aware of the fact that, Joseph Schumpeter, I was writing this today about Joseph Schumpeter, the economist who many years ago was talking about creative destruction and how when you bring in something that is truly, innovative, you're going to upset a lot of people because it challenges everything they believe. It challenges the existing business models that are the dominant ones, the policymakers that are controlled by the existing business models. All the tax system, everything is pretty much set up to support the status quo. And when you bring in something that's way out in right field, it really upsets a lot of people. So I think there's a great article in the Harvard Business Review that I put a link on the blog. If you're not pissing someone off, you're probably not innovating. That was a few years ago that person was writing. And I think that Mr. Musk just fits into that category. So unfortunately, this is the cross he must bear, in trying to drag his country in some aspects, kicking and screaming into the future where he believes, is a healthier future with less air pollution and less sickness and death because of pollution. There's a lot of upside, and I think, frankly, it would do well to cheer and hope for the best with that message. Now, again, whether you want to buy the shares, that's a completely different discussion. And I think in his talk with analysts, they were talking about, a lot about what could go wrong financially, and he was saying, listen, do you want to hear about what we're doing right at all? Because that's what I'm trying to tell you. I'm trying to tell you this is what we see as the next hurdles, and this is what we see as the next progress. And basically I think he was overtired, but to the points that were made, I think they were fair in many ways, just saying, listen, if you want to hate me, fine, but if you want to hear about what we're actually doing, I'd be happy to talk about that.
The future doesn't come without a risk.
The future's full of risk. The future is only risk. The truth is we don't know anything about what's going to come. We just make up, educated guesses and sometimes blind faith and uneducated guesses about what may be coming. So we're constantly always having to, prepare for the worst and hope for the best. That's, and anyone that's run a business realizes that, especially if they're trying to do something really untested or brand new, there's incredible risk around all of it. But I think the thing that I admire about Musk is that he continues to do this day in, day out, keep pushing, trying to accomplish, what he set out to do, and has already had such tremendous success. And yet people want to quibble over, well, yeah, but you were 3 months late or you were 6 months late. I mean, this is the kind of nonsense, right, that someone who's never actually created anything can focus on the fact that you were 6 months late, but meanwhile, you actually delivered an award-winning product that everyone said was impossible. No one seems to want to even notice that. They just focus on the fact that you should have been 6 months early or whatever the time frame they have in mind. So it's a tricky business. It really is.
Well, one of my regular guests bought a Tesla and he loves it. It's fast, it's reliable. And this whole thing about range anxiety, it lets you know what your charge is and where the nearest recharging station is, so you never do run out of power. And he's driven tremendous distances in it.
This is the thing. If the people that own the products have almost universally glowing reviews, the people who review the products, the Consumer Reports, and the people who are in the know about the industry have glowing reports on the product. So it's a miracle that they've accomplished what they have in such a short period of time. And, too few people want to acknowledge that because they're fighting against the change or the idea, or they find him, whatever it is. He just is the lightning rod for people that want to hate him.
And here in Vancouver, where people are paying $1.60 a liter for gasoline, I'm surprised that there aren't lineups around the corner to buy electric vehicles.
Yeah, well, I think it's the inevitable future. And I get hate mail every time I say that, so I must be on the right track here too.
We'll have more with Danielle Park and the answer to our listener question right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features to our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Danielle Park. Danielle, one of our listeners, Eric Duffy, wants to know, how can regular folk with no debt waiting to purchase a home, how should they position themselves at this point in time in the marketplace? Or should they even bother?
Well, I think, I get that question fairly often, and I think it comes from people who are saving their down payment. They've already perhaps retired their debt, and I always suggest that you try and retire all your debt. If you have to borrow to buy a house, retire all your other debt before you start that goal. And focus on building up your down payment in a significant amount before you try and reach for housing. So I think the question often comes when people have cash in a savings account and, maybe the people at the bank are saying to them, hey, do you want to talk to a financial advisor? Because, while you wait, you could be investing it in these products. And I caution people because if you have a fund that you've already earmarked for a particular purpose, whether it be, to buy yourself a car in a year or whether it be to buy yourself a house in a year or two, that is the focus of that fund. And it is a mistake to then take that fund and try and dabble or, in some other, quote, investment area, while, to try and make it grow faster. It tends to be, devastating to the capital because you have a very short-term horizon. You've already committed that money to something else. So don't worry about trying to take it and then put it into, stocks or financial products. Keep it in savings because that's what it is. It's your house fund. So at the very most, I would suggest that you do a ladder of GICs, money coming due every 3 or 6 months or a year, depending on how much time you expect to wait to buy your house. And if you're waiting for housing prices to retrace, which they are already doing in many places, and particularly in Ontario, I don't think we're through that yet. I think that we should expect that to continue for perhaps even another year or so. So at this point, it's a good time to just park your cash in savings or GICs where you're getting modest interest, but you're highly liquid and you don't have to face market risk. It's a disaster if you try and use that money that's already committed for short-term trading or speculation, which is ultimately what that is. If you're trying to put it into market-based assets, you're really mixing up your metaphors there. So keep it, know what the purpose of each account is. And if it's your savings for a house, keep it in savings for your house. In terms of your longer-term retirement money, well, that's money that you have set aside for, a goal, to provide income 5, 10, 20 years down the road. And that you can start to look at other instruments. But for the house fund, it needs to be really paired off.
Danielle, thank you so much for chatting with us.
Thank you, Jim.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. If you have any questions for the show, like Mr. Duffy did, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.